You're listening to RIAcast, a podcast of the Southwest Florida Real Estate Investment Association. RIAcast brings together a variety of real estate entrepreneurs from all over the world to share tips and ideas. The core purpose of the Southwest Florida RIA is to help members become more profitable and successful through networking, education, and empowerment. Here are your hosts, Jeff Tamburello and Michael Lyons.
I am Jeff Tamburello, one of the directors of the Southwest Florida RIA, joined by Michael Lyons, the other director of the Southwest Florida RIA. We've got our luncheon speaker, Brendt Vitale, with us, or as we should say, full-bird Colonel Brendt Vitale.
Retired.
Retired. You're like the only colonel I've ever been around that wasn't mean to me.
Not yet.
Not yet.
All those other guys made us do all this, walk 30 miles and stand in front of your wall locker afterwards, and it was never fun.
But they were all Marine colonels, right?
Yeah.
That's the difference.
Yeah, they were very serious about being Marine colonels, that's for sure. But Brent's our speaker at the luncheon. You're an investor. We're taking and having some investors that have had some success that are kind of telling their story. So with that said, we've got a couple questions prepared. And I think, Mike, maybe you want to ask them the questions?
Sure. No, yeah. Well, Brent, first of all, thanks, man. Appreciate you being willing to speak, and also for this time now for a little kind of prop video for the actual meeting itself. But just give us a little about your background of the starters, kind of how you got in real estate, maybe when, how long you've been doing it, and let's start there.
Okay. I think the first note to take is that I didn't get started in real estate realty later in life. Yeah. And maybe the lesson there is you can start at any time. It's never too late. Yeah. But when I look back at it, the seeds were planted way back when I was born in a duplex. I thought about it, kind of joking to myself. We were in the upper level of a duplex. We rented up there, and my father's mother owned the bottom part, and she owned the whole house. And we were there, for by 5 or 6. Then she moved back to Italy. We moved into the bottom and took over the whole house. And there was a renovation going on because it was old. And I remember when I was 5 or 6 outside in the backyard playing with all the materials and building little forts. So you already have the seed plant in your mind about what a duplex is, the renovations that involve with it. Fast forward, my first purchase in my 20s was a duplex. I figured, let's get a house that, the renter's paying for most of the mortgage or half of the mortgage or whatever. And my father was at that point had already purchased a couple of low-end duplexes as a supplemental investment. He was a draftsman by trade, and did some other things, but he decided to get into real estate in the mid 70s. Probably not good timing. And by the 80s, he had a couple of low-end duplexes. So he had that background. I never was really interested in that, but I helped him a few times with maintenance and little jobs. And I think he just wanted to show me the ropes kind of thing. So that seed was planted then. Then you fast forward, at one point I started out in with my videotaping business in the 80s, and I had that for 20 years, and that was what I was doing. But I had this inclination I wanted to go to Florida. I had family there, and we talked about it. We started visiting it, and then we would go every year. We'd go for a little bit, and it got longer and longer. We first went for a couple of weeks, and it was twice for a couple of weeks, then it was a month. And I finally decided I want to make the transition. But when you have a business and you're up and running, and it's an annual thing, we had a lot of clients who did jobs that need to be prepared 6 months to a month in advance. Like, for instance, we videotape weddings. That's a typical example. Okay, you book that a year in advance. So how do you transition a business from here and leave? It's hard to do that. So what I finally decided to do is I was going to do an overseas tour for a year, just close the business down, and it would be starting from scratch. And that's finally what it took. I wanted to get to Florida for so many years, finally did it. And that was like around 2010. And then when I got here, I decided I'm just going to continue doing stock trading online. That's going to be my source of income. But the best thing I did when I came to investing in stocks was I bought gold stocks right around 2008 and 2009. I had this premonition going back again when the seed was planted. In the late 70s, I remember when gold took off and there was talk about it. I was just a kid at the time, but it set in my mind, and it's like, oh, that's one of those weird things, a once in a lifetime thing. Fast forward to the later part of the 2008 and 9, when the stocks market crashed and real estate was crashing, gold took off. And I just had this premonition, now's a good time to buy gold. So that's where I got my little nest egg, was able to use that money to invest. I did some stock trading. And everybody was doing well stock trading in the early part of the upswing, because no matter what you bought, the market was going up and it lifted everybody up.
Sure.
So I remember people, all bragging about, oh, look what I did on this stock. That didn't matter what you got; it all went up. So it got to the point where in the mid-teens, or early teens, some of the stocks that you had good research on and good advice on, they did bad because of something that was unexpected. So it got to the point where I was convinced that no matter what I did in terms of research, it didn't matter. Sometimes it was just either timing or what the whole market was doing. So I figured it's time to get into something else. And by coming into Florida, I decided, let's transition into selling property, because it's such a popular thing down here that new people coming, buying and selling. So I decided to get a license, and my intention was to, buy and sell properties. What I didn't realize is you have to get all the leads yourself. I remember back in the 70s when my father did a little bit of that, and you go to an office and they would bring leads to you and you would get some yourself, but it was kind of low key, kind of passive. But when you're a licensed agent, you got to get all the leads yourself. And if you're new to the state, how do you do that? Who do you know? It's not easy. So I did a lot of research and did a lot of training, and I was all set to go. And you realize, and this was when I was in Naples, you realize that every other person has a license. So I'm not sure if that's going to be a really good way to go. So
it's not like everyone knows a licensee. Everyone knows 7 licensees.
Yes, yeah. Yes. So it's probably not the best way to start a new career if you're just starting off fresh.
Sure.
You're already later in life. So something happened. I was visiting a cousin in Fort Myers who was moving and moving into a place he owned, and moved into a rental place. And he was talking about some of the nuances of the rental. And we knew the guy who owned the place. He did some things to fix up my mother's property. And apparently he did a lot of this, and I just started talking about it, and something just clicked in. Hey, let's get into the rental market. So I bought the first duplex I got was a 2-1-2-1. It's in North Fort Myers. And my thought at the time was, I'm going to check on the MLS and look for value, because I really didn't have anything to go on. So I looked at the price, I looked at the square footage, and what the rents were, and it looked like it was a decent investment. So, why is it priced what it is? Well, this is right after I guess after the economic downturn, a lot of places were a little bit questionable, okay, in terms of how they're maintained and the kind of tenants you had. And this is one of those areas. This is one of those areas that was right on the edge. Okay, it was not bad, but it wasn't good. So, I figured, let's try. What's the worst that can happen? So, got a good value on that. I found out after the fact that the tenants were questionable on both sides. They actually were related to each other, and they were doing some drug dealing. But as a landlord, you don't know all those nuances. And
did they offer you good deals, or did they? How'd that go? Or they didn't know?
I missed out on that.
Did you at least get a discount?
It kind of took care of itself, because over time, this whole area, I guess, was there were several places that were dealing this, and I found out with some other areas that I was investing in that there's little pockets of Fort Myers that are good right next to an area that's not so good, and it's really a fine line. And sometimes it's people who it's drug related, whatever. But as every year passed, they just got better and better, and it just cleaned itself out. So every area I'm in right now is decent, somewhere on the borderline, but they just got better as things changed economically. So from that one, I liked the experience I had. It needed minor work, things I could do, nothing where I needed to hire vendors for. So it was ready made, ready to go. Then the next place I got was an older place built in the 40s, but it was a duplex with another singleplex in the back, single home. And it's like, this was back when they were selling for like 80 grand. This is in Fort Myers. And it needed a lot of work. It was old, but I figured, well, geez, at that price, how can you go wrong? I mean, even if you get low rent, who cares? Yeah. And it needed work. And then I found out after the fact that it had termite damage and it had some other things, but it was a good experience from this standpoint that I'm not afraid to buy any property that's got termite damage. The good side of that is it scares away the competitors. Oh, you got this? I don't want that house. Yeah. It's not that hard to fix. And I found out that in Fort Myers, it's susceptible to annual termite infestations. So what you do is you have these companies, you sign them up, they get in, they clean it out, and then you have an annual contract where they come back for several $100s and retreat the house. And if that's what it takes to get a good value, why not? So I have 3 or 4 properties now that have that termite issue, and it's very manageable. So that's just one example where if you want to have an edge on getting a value in this competitive market, sometimes getting a property that's got some issues that no one else wants to touch gives you an in. Sure. If you're willing to deal with it.
You sound like you researched it to find out that it wasn't as bad as people were scared of it. And I think that's very true in a lot of investments. They're worried about, I don't want to deal with that. But I mean, even now, you don't have to tent anymore. They have ways of doing that without tenting the property, which before was a big deal.
I don't even recommend tenting, because tenting is a one-time shot, and then what's going to happen next? I like the annual treatment way is the way to go.
Sure, agreed. No, I totally agree. Yeah,
but that's just one example. There's other things I think that, like, to say if a house has septic, I'm sure some investors, I don't want that, and I don't prefer it, but I have several places that do, and it's very manageable.
Agreed. No, I totally agree with that. Now, so you've done it. Great description thus far. How would you say your approach to investing in real estate's evolved throughout doing this now for several years? I would say, at least.
Well, I assumed that up front I was just going to get duplexes only, because I think that's the best value. But it didn't take but a few years where it got to the point where it costs more and more and more to get the same thing. So I decided to transition into single family houses. I was able to get some really good prices on single family houses, again, that maybe need a little bit of work, but they were decent. And I went from the 2-1-2-1 strategy to getting 3-2s. And that's a very easy thing. Or sometimes just 3-1, which is fine. And that's worked out pretty good. In fact, the last transactions of the last several years have been nothing but single families. And I don't have a preference for anything. I just go for value. And that to me is where it's at now, is that.
And in your returns too, I mean, you're looking at duplex, the cost has gone up a high. I do love duplexes for cash flow, but you're right. The price has got so much in some cases where it didn't make any sense on paper. But even the single families, I think a lot of people, on a total side note, to go on the single family tangent for a minute, single families always rent. You can always find a body for them, and that wants to live in them. And I've even found the 3-1s and the 3-2s that you're referring to, of which you and I work together on those, on renting them. A 4-2 or 4-3, great investment can be, and we'll appreciate and all those things. But at the same time, more bedrooms, more people, more wear and tear. I mean, there's some pros and cons to that people don't think of. It's got 5 bedrooms. Like, yeah, that's a lot of people. So if you're looking at investing, take that into consideration too, because there's more people involved in it. So 3-1 and 3-2 are perfect. And that's
I had a 5-bedroom house on Seminole and between the river and Palm Beach. And it was impressive the amount of people they could fit into a 5-bedroom house.
Oh yeah. Yeah. That's
and yeah, it's an insane amount of wear and tear. And it had a big den too, which turned out to be the 6th, 7th, and 8th bedroom when we ended up evicting them. So it was definitely
speaking of the number of bedrooms. That was actually a trick I caught by accident. When I was looking on the MLS, I decided, well, let's go by numbers of beds. Let's go by 6 and 7 and 8 bed, whatever. I was able to find properties that were pseudo duplexes based on that. So people who want to get those investments probably would have never did that. But for instance, you're familiar with the one on Nuna. Yeah. Okay. Yeah. I found that one because it had like a total of 7 bedrooms, and it's actually a single house, but it's divided into 2 where it's actually a duplex. Right. So that you can do little tricks like nuances that when you look for things that someone else might miss. And that was kind of interesting. But I have to say that one thing about my investment strategy that hasn't changed from day one is I like to invest in value and low end. Yeah. I especially like the low end because it's not sensitive to macroeconomics. So if you have renting to the lowest end of the rung, no matter what happens to the economy, you're always going to have tenants, and you don't have to worry about interest rates or all the things that are going around that are concerning everybody else. And in some cases, the worse the economy gets, the better it is for you. You have a bigger pool to draw from.
Sure. No, that's so true. That's, again, everyone has their niche of what they go after. But I've seen the upside of the higher end is potential appreciation depending on what market you're in. But you're right. When the market goes south at all, that's the first to get hit, first to start feeling the impact of it, and the lower end doesn't.
The other upside to low end is that you have less to lose when things go wrong, especially if you're a new investor starting out. All the nuances you're going to learn the hard way, trial and error. The lower end you go, the lower the expenses, the lower costs. And risk. Your vacancies are hurting you less. Yep. You go on the high end, you might be able to make more money, but then the potential downsides are bigger. So it's just a safer way to go, and it's easier to manage, I find.
That makes sense. Totally agree. Jeff, any additional questions? I kind of covered the tidbits we want to go over prior to his presentation, but anything else you want to add to that?
Yeah, if you could go back and give your younger self one piece of advice when you were starting this journey, what would it be?
I think it's basically the management side of it. Getting the properties, that probably would be the same, and the types I would get in that part of it. But for instance, I'll give you a simple one. When you're trying to renovate the place, there's certain renovations that make sense and certain don't. For For instance, let's say if you're gonna paint the place, use the same types of paint, use the same colors or whatever, same scheme. Don't try to be creative here and fancy there. Don't do that. Know what you're good at, what you have to let another vendor do. One thing that I want to do from the beginning was try everything at least once myself, so I have a feel for what it is and what I can and can't do. And that way, if someone else is going to do it, you know what's involved. So when we call this passive investing, let's face it, it's kind of more closer to the active investing, because you really want to be an active participant in what's being done and monitoring it. And the goal is, of course, is to transition out of that later on down the road. Obviously turning it over to a management company, but even from your own standpoint, you want to get to the point where you do less and less later on, but at least upfront, expect to do more.
Well, you were talking about do one thing yourself. If the vendors, the contractors, if they smell that you don't know what you're doing, they change their pricing really quick. It's the flux capacitor that's next to the stud that's bad on the drywall. And
it's funny you mention that, because whenever my mother needs help at her house and she goes and gets private vendors, and I've seen this in person, she always acts like, "Oh, thank you so much. I'm so glad I don't know any of this." And you just see them take advantage of her. And I think over the years I finally got to her, let me be there, or just tell them, that someone else who's done this, and find a way to make them not take advantage of you, and be wary of being too kind and nice to them and acting like you don't know anything, because that just opens up their checkbook saying, okay, this is going to cost this much.
Well, I found too, to combat against that helps is, hey, we're getting more than one person to look at this, give us a bid. So we're gonna get best price, and they know someone's coming behind them. That helps. I mean, it doesn't safeguard completely, but it definitely helps.
Whatever they come back with, kind of like, okay,
Yeah.
Oh, that sounds great.
Yeah. Oh yeah. Let me check. Have my other contractor. I talk to them first, and then I'll get back to you. Whatever excuse you use to buy some time, but so they know you're not just talking to them, because they're like, all right, got a sucker. I'm gonna, charge as much as I can for it for things you don't need. So that makes sense.
Yeah.
Well, Brent, we're really, really looking forward to your presentation.
This concludes this edition of RIAcast. Be sure to subscribe to receive our next episode. You can also subscribe at our website, www.swflreia.com. See you at a meeting soon. Please let us know if you have a suggestion for a future episode.